All right, we're going to do a little bit of a market update in video format instead of live stream this evening. I'm having this weird lag issue where I pull up a chart. It takes forever to pull up and load, so I didn't want to live stream and have to deal with that. So I just preloaded everything. We're looking at the S&P 500, a really cool highs minus lows chart tonight. Then we're going to take a look at Bitcoin and then Ethereum. So first, the S&P 500 kind of breaking out, and we're so far down this trend line that there's a couple of different ways to draw it, of course, right? Depending on whether you draw it on the logarithmic or on the linear scale, you're going to get a slightly different result. Obviously, the further away you get from the beginning point of your trend line, the more sensitive the changes at the end of your trend line are going to be. So it does look like we are breaking out above this trend line, but we don't know for certain whether or not we're going to hold on top of it. So we'd like to come up and test these highs at around 4,100, then maybe get a little bit of a correction back down, allow our 21-week simple moving average, which we just held support on, which is a good sign, which is a bullish sign, to come up and act as support before we push up higher and potentially see 4,300 or even 4,600. I think 4,300 is the immediate target if this rally continues. Remember, if we break this bearish structure, hold support, and continue to move higher, and after putting in higher lows, and then we make a higher high, that is a very bullish structure. Right. And it kind of fits our thesis or our underlying idea here that Q1, particularly January, but overall Q1 could be a good quarter, as we would expect historically from the midterm election date, November 11th, historically through feast and famine, through wars, through recession. We would expect in the 6 months following, right? This is what the historical analysis says. The 6 months following that election, we would expect roughly a 15% return, regardless of economic circumstances, because this historical data goes all the way back to the early 1900s. Goes through depressions and crashes and whatnot, wars and all sorts of different events. We would expect 15% returns in the following 6 months. Now, I'm not saying that's what we're going to get. We have tough economic circumstances, but in my opinion, I've said this for a while, I do believe that we could see something along the lines of that. Something along the lines of maybe 10+%. This would be a 9% gain to move back up to this previous high before we see further downside and recession later on in 2023. So that is kind of the flexible model. I say flexible because we can always change our minds or flip-flop if we get additional data, but ultimately that is the model that I am working off right now, and so far everything's going according to plan. We just do need to make sure that we hold above this support. The good news is we've put some space in between our 21-week simple moving average and where the price is at right now. So all things considered, we're looking pretty decent. The next big event is February 1st. That's the next rate hike. There's like a 99% chance, I believe, is what the market's baking in, that we get a 25 basis point rate hike. So the market's fairly certain about that. So any surprises would obviously affect the market, but as long as no surprises, I think the market's in a pretty decent place, kind of the Goldilocks zone, to maybe get a little bit of a push here before we see maybe a further downside in 2023. The other indicator that you guys know that I love to pay attention to for bottoms, if you or have recently been paying attention to for bottoms in the S&P 500, if you tune into this channel, is the New York Stock Exchange highs minus lows, right? So this is the number of stocks making new highs minus the number of stocks making new lows. So when this is above, this is the zero level, right? When this is above the zero level, you have more stocks making highs than lows, then this is positive, right? So this is just going to help us normalize the data a little bit and understand, hey, maybe there's, the stock market could be moving down because a particular stock or something could be overweighted and drawing it down. This is going to help us normalize the data just a little bit. And we see this pattern over and over and over again where we get stock market bottoms. It's in line with where you see a crossover and a breaking of a trend line in this highs minus lows chart. So we've now broken through that, and that is a bullish sign. That does not mean that we can't break back down below it later this year or even in the coming months. But so far, if we zoom in here, we see this pattern where you break through this trend and hold support on the back of it, and that usually signals a stock market bottom. So this could be a local bottom, and again, maybe we see further downside in 2023. But for now, this is a bullish signal. Now, I want to take a look at Bitcoin, and I want to be very cautious about Bitcoin. And I'm being cautious about the legacy market and the S&P 500 as well. I do think that Bitcoin and the rest of the cryptocurrency market has broken bear market structure and is going to continue in this bear market rally for some time. However, in the short term, we are getting some quite frankly bearish signals, nothing too alarming yet, but we are on most cryptocurrency charts, Bitcoin, Ethereum, and most altcoins putting in some bearish divergence on the daily and on the 4-hour. Right. And that is coming off of a very strong trend. And a lot of times you just need that pullback. You need that pullback. Now, I want to show you guys what happened in the 2019 bear market rally, and that doesn't mean that that's what's going to happen this time in this bear market rally. But last time we didn't get a strong pullback. We just kind of got this continuation pattern, pump. We did get like a kind of a weird stray wick that was a large pullback and a little flash crash, but it got eaten right back up. And overall, there wasn't a lot of strong corrections to allow people to get in and buy until the top. And if you were buying the corrections at the top, you had some rallies, but you did not get continued upside. Now, what's different about here, right, which would be kind of where we're currently at in our current bear market rally if we were to draw some parallels here. What was different about this, though, is we got some, it was very apparent in, kind of real time if you look at it, but it's kind of, difficult to pick out if you're just looking at all of this RSI data. But I'll point it out for you that we got very strong bullish divergence here, right? And that was the signal to get in and ride higher. So we do want to keep a very keen eye out for a print of bullish divergence. But in Bitcoin right now, we've got our margin pressure levels going, and we're heading into resistance at 23.2K, and that's held so far. So if we break through and make support on top of it, sure, maybe we can go for another pump, but we are putting in that bearish divergence. Bearish divergence on the daily doesn't mean you can't get another pump. You can certainly put in multiple points of bearish divergence, but what it does mean is it's very likely that this trend is somewhat exhausted and potentially nearing a top. This may not be the top. Maybe we push up and hit 25K and then we get our correction. But we do need to be keenly aware of the fact that this trend probably has more potential for downside right now than upside. Now, I do want to be a buyer of support and a pullback, and I think the rest of the market would probably agree with that right now, or many market participants would. And we'll see if that market or if that pullback manifests, and if it does, we'll see if it gets bought up. But this would be our kind of support range in line with all of this price action over here. Ethereum's giving off a very similar chart and a very similar feel, again, with the bearish divergence here. We got to be careful. Doesn't mean we can't get another pump. A lot of times you do get another pump in situations such as this, and you put in what is known as a bearish ascending wedge, right? And then you fall out of it and then move back down. So we could certainly get one more pump, but if you look at what the risk to reward here, if we do get one more pump, it's not a ton of upside for potentially much larger downside in the short term. However, again, we're in a new regime, or trying. It appears that we're in a new regime, a more bullish regime, a more bullish outlook, a bear market rally that could go up to 2150, maybe even higher. If we throw on our easy bands, we do see that we are above our 21-week simple moving average. Remove my drawings here. It would make a lot of sense to me if we put in this ascending wedge, bearish ascending wedge, fell out of it, came back down to our 21-week simple moving average, held that as support, and then got our push up to the red easy band zone, roughly around 2150. So that is kind of the framework I'm operating based off of. I don't know for certain that that's what's going to happen, but I think it's a reasonable, fairly based prediction here, and a setup very well may manifest according to that. And I want to be a buyer in this 1340 to 1433 range, and then ride up to around 2150 to take profits. Again, if that doesn't manifest, then I'm probably not going to take trades. I'm just going to wait for the situation that I think is most profitable and most likely to trade this. So hopefully that makes sense, guys. If you want access to these indicators, go over to Sistine.ai. And again, I don't know why it's taking pages. This is kind of what the issue that I was talking about at the beginning. Pages are taking forever to load right now, and this is why I didn't want to live stream. Probably should have had this pulled up already. But if you want access to the trading view indicators that we are using, the margin pressure levels, the easy bands, head over to Sistine.ai and sign up for the Research Hub. You also get access to the Research Hub. So you get access to the trading view indicators, the Research Hub, and the Discord group. If you just want to check out the Discord group, which is a fantastic community and a great place to stay in tune with what's happening in crypto, and find alpha and what other people are talking about in the crypto space, and analysts who have been here throughout this entire bear market, join the Discord group. It's only $9 a month. But if you're looking for the Research Hub, that loaded pretty quick, where we have research reports, plays, and principles, which is educational content, then go check out Sistine.ai and sign up for the Research Hub. And then we do have the professional group if you would like to join the professional group, which is a group that meets in Discord Wednesdays at 5 p.m. Eastern time. We do record the meetings for anybody who can't make it, and I'm more available in that group. And it's a group of people that are just trying to take crypto to the next level and really be involved, rain or shine, bear market, bull market, and put a lot of effort into their crypto journeys. So if you're interested in being in a group of people such as that, I think it'd be a good fit for you. Now, that's going to wrap it up for this evening. Apologies for not being able to live stream tonight. I just didn't want to deal with pulling up a bunch of different pages and pages taking a long time to load. But otherwise, if you enjoyed the content, please do like, comment, subscribe, and thanks so much for tuning in. We will catch you next time. Peace.